Sound the alarm, they say. We are looking at the national debt of the United States hitting $30 trillion. It's incredible to see. We all knew it was coming, but here we are. The first thing I want to look at is that $30 trillion debt and what it means to you. The second thing being the central bank QE. We have to look at what they're doing as well as their interest rate hikes and what some are starting to say. The third thing is the economic misalignment. Some very confusing and odd circumstances happening, but how that correlates in with the pension funds as well as retirement accounts of all kinds. I've got some interesting information as well if you stay until the end. Let's begin. If you stick around until the end, I will cover information related to the metaverse, but I want to look at this first because in this world we live in, we got enough problems, let me tell you. Sound the alarm, national debt hits $30 trillion as economists warn of impact for Americans. It doesn't mean a short-term crisis, but it does mean that we are going to be poorer in the long term. This is coming from JP Morgan. And that is an issue, of course, that nobody wants to talk about. Yeah, kick the can down the road. I get it. But what happens here when you have a different environment than what we've had for decades and decades? Oh, now we've got a problem. You see, because as interest rates are going down, it's cheaper and cheaper to borrow that ever-expanding debt. When that flips, you got a big problem. And of course, this is not sustainable in the long term. What does that mean? Well, I've brought this up many times before, but what about slashing social assistance, slashing pension funds, slashing services to people? All of these different things that we take for granted every day, or perhaps we've paid into, are suddenly going to be taken away. Why? Because somebody out there had this idea that there has to be an inflation tax and there has to be other forms of debt put onto people that simply they don't know what's going on. They don't have any part in it, but they have to pay their share. And that is a problem long term. But guess what? That timeline there, that's getting shorter. Look at what's going on. Speaking of debt, how European government debt grew over the last couple years. Spain, 26%. That's the percentage point increase in government gross debt. Spain, Italy, Greece, UK, and then it goes down. Unbelievable. Spain already in big trouble. Italy already in big trouble. I covered these in both of my books talking about, I basically said, watch Spain and Italy specifically because of their debt. Like I said, it's all good when the interest rates are low, but what about when they increase? You got a problem. After a huge year for growth, the US economy is about to slam into a wall. There are cycles that take place and people need to be aware of them. And this happens time and time again, but we have to really zoom out in order to get that perspective. Most people can't do that. They can't zoom out. No, they're focused on what's happening today. Which stock do I buy? I need to buy 0.7 shares, 0.7 shares of a stock. Which can I do? That fractional investing. No, we need to zoom out. We need to take focus. Okay, there's a very, very big difference in between what we saw this market today and the market we saw last year, the year before, and so on. Things are very different in respect. And of course, we see repeating patterns being the same as well. So you got to look at that in different ways. The US economy last year grew at its fastest pace since 1984, but that momentum isn't carrying into 2022, of course, on the back of massive stimulus. CNBC, you forgot to mention that. But I think it's important to look at what's happening with individuals. Forget about all that data. Well, I'll show you these charts. I mean, you can see the U.S. consumer spending is now being tested, waning the fiscal stimulus, inflation, and the stock market volatility all being issues today. And individuals are having problems. Their finances, their buying is ticking up just in the last month. But at the same time, overall, this is not good. What does it signal? Well, of course, it signals that the average person is paying more for stuff. They got to pay more for their food, their energy, their electricity, and all the things that they have in their daily life. At the same time, they're not getting any more out of it. So that's less money being spent in the economy, and we know what happens as a result of that. But there are some people who are making more money than ever before. World super rich drive 77% surge in super yacht sales last year. Did you buy a yacht? I'm not, for me, I didn't buy a yacht, but certainly some people are. 887 super yachts sold in 2021 alone. That's more than double the number in 2019. So they do mention a few names on here like Bezos and so on, but I think it's important to understand it's not just one guy. Okay, look at what happened with Amazon stock over the last while. It hasn't been performing that well over the last, look at this, AMZN. So if he's relying on this in particular, I don't want to just single the guy out when we're talking about Amazon. It is right now, even with this bump up in the price, it is still at the level from July of 2020. So it's not just one stock or not just one person. We are seeing sentiment changing in all categories. Now, I want to talk about the Federal Reserve, the Fed, your friend and mine, because they provide that liquidity. Oh, yes, they are so wonderful. This is basically talking about, the article itself is, in my opinion, complete nonsense, but further down here, I found this. It's talking about the central bankers and the punch bowl. Well, how do you put the punch bowl out and then take it out at the right time? Bill Dudley, you know him, former Fed. How quickly do you remove the punch bowl? Can you replace it with something smaller like a pitcher or a few plastic cups? How much do you explain what you're doing? What happens if the party turns into a free-for-all? Well, this is important because there is no proper way to do it according to them, and they just have to try their best. That's what they're saying here. I think it goes a lot deeper than that, and the fact that they actually want to intentionally create a crisis. If you want to know more about the creating a crisis, I have the video. If you go to my channel, the main page when you first land on the Money GPS YouTube channel, there's a video there and it explains all of that. I go into depth. I actually wrote everything out and just read it. So I would highly recommend checking that out. The Fed won't be rushed into its hiking path by Wall Street frenzy. What are they talking about here? Oh, yes. Look, if the market starts to dip, the Fed is going to back off. But I think people need to understand about this institution and what it really all means. Because while they can turn it around, they got to remember there's also a level of the Federal Reserve doing what it said it would do. If they stopped, if we went and looked like it was going into a recession and they stopped, what do you think that's going to signal to the market? Oh, wait a minute. The Federal Reserve's not increasing interest rates? Oh, wait, whoa. Wait a minute. We're slowing down. Oh, look at the ISM. Look at the manufacturing. Look at this. Look at that. And suddenly it's going to actually be a self-fulfilling prophecy. If they increase a little bit, and then they wait a few months, and then they increase a little bit, I think they'd be much better off. And that's most likely what they're going to be doing. Now, if we get full-blown recession, it's pretty obvious, well, then that's a different story. But at this point here, they really do not have an excuse. So let's climb up the bookshelf, making our way, I guess it's catalog card or whatever you call this. Let's look at what's happening with assets. It's unbelievable. You can see the total return performance of major global financial assets in January, when people were talking nonstop about the S&P, about the Dow Jones, about what's happening with tech stocks. What people should be looking at was oil, because oil outperformed by a large margin all of these other things. You could see right here, S&P 500 was down considerably. And if you had that type of money set aside specifically for speculation, people were buying the dip, dollar cost average. Why? It's all a speculation in that regard. Look at Brent. Look at WTI. Look at these things. Over 15% during that same period. And it's hard to see on here, the S&P 500 down about 5%. So there is more than a 20% differential in between the two. And it wasn't so hard to see based on so many different factors. And it's not some obscure product. It's not shorting the market. It's using your intelligence to understand where is the best place to park this part of my capital. If you're just always doing one strategy, that is a big risk. Different story. Look at this, the PMIs, manufacturing. Okay, manufacturing right now, the data is showing this, basically this topping off. What does that mean? Well, we've got issues, no doubt about it. I mean, some of this is caused by the fact that if we don't have the materials, if we don't have the labor, well, then that's going to create an impact here. So that certainly could distort things. But we are getting a lot of data other than this, which I've shown many times before, just explaining the fact that there's a problem. There's a big problem today. And it can't be fixed by fiscal or monetary stimulus, particularly on the monetary side. This is the ISM manufacturing report on new orders, prices, and employment. And what we're noticing right here, new orders going down. And this has been a little while. Not at a good time, because that was basically Q4. Q4, we should be seeing more of it, more positivity. Not the case, okay? And again, what was going up and what was going down? Energy was rocketing over the last little while. And yet most people just doing the same old. All right, very last thing, you stuck around until the end. And, this is one company I've talked about before. I don't usually talk about individual companies that much, but App Harvest. Now, it's an indoor, let me show you this. I just think it's interesting. I don't know anything about the company's internals, some financials, and so on. Okay, there's a controversy about this and that. And they've got Martha Stewart backing this and so on. I just think this idea could be extremely necessary. The stock is down like 90%. So I don't know if you could see this here, but basically it's a massive indoor farm. Think about it like a greenhouse, mass greenhouse. So if the environment becomes much colder, less hospitable to growth and so on, imagine this right here, how valuable it becomes in that place. If the area surrounding, suddenly you can't grow crops, but you could still do so indoor, it benefits. At the same time, we have problems getting food. Like California is growing food, it's sending it to Ontario. Well, there's a problem here. If the truckers can't make it over the border, what happens to the food supply? It diminishes and dwindles. And what happens to the price? It goes up. But if you had one of these in your area, which, by the way, there's a huge financial cost, which is part of the problem with the company right now. That's a hurdle. If they can get out, not just this one company, but this idea. Like I said, I don't know anything about the internals of the company. This right here could be massive. And I hope that this type of thing spreads. I hope this is something like I've talked about before, where they can take, let's say, Sears and JCPenney and all these different stores and convert them into indoor gardens. Okay, there are downsides. Yeah, I don't want to talk about that all the time. I'm just highlighting the fact that we have a problem and we need solutions fast. The problem is manyfold, in my opinion, right now, because it's supply chains and so on. It's exacerbated. But at the same time, many have said that we are going into a much cooler period in terms of temperature. And if that's the case, we are in big trouble. We need to fix it fast. And we need to do so on a local level, as local as possible. That's all. If you appreciate the information, just give a thumbs up. That's all I'm asking, okay? The views, they're going down. And that's why these thumbs up really do mean something to me and the channel, and trying to continue on as much as I can. Thank you very much for the support. If you haven't seen this video yet, you definitely want to check it out, all right? Click it, and I'll see you there.